Hello everybody, welcome to my daily chart for today, June 26, 2012. We're in a 60 minutes chart of Euro US dollar, and we assisting at the Euro collapsing again against the dollar after it formed this double top chart pattern. These are always chart patterns with implications. I shouldn't say always, but most of the cases these are chart patterns with deep implications for the ongoing trend. In this case, reversing this uptrend that's been going on for a couple of weeks. We see a pretty massive double topped formation formed by these two highs that happen at the same, approximately at the same level of 12750, and the neckline formed by these lows, where the price lingered a little bit last week and at the beginning of this week, and then it suffered a breakout. We see this breakout coinciding with this shy retest of the MACD of the zero line, after which it continued lower. We consider that a pretty good confirmation, given the situation that we have here around the price, with these resistance zones, pretty powerful resistance zones, with a trend line that failed to break on a retest. That would have been a good trading opportunity to go short in a market. It would have yielded a pretty good amount of pips with a good risk to reward ratio. The stop loss would have been somewhere around this area just above the neckline, with the take profit around this 12500 limit. So it would have been at least 70-80 pips profit on this one. And we have this the price moving within this newly formed trend channel with a retracement that just kind of ended. We see the price reach the upper trend line, the resistance line, again reinforced by this Kumo cloud, with the MACD kind of confirming that bouncing itself from the zero line. So this can be a good opportunity to go short again. We have to keep in mind a couple of things. We have to be careful at these divergences at the MACD that's forming higher lows. We see it right here, which does not follow the price. We see the price is making lower lows, and again the MACD is making kind of equal, if not even higher highs. As far as the price goes, that does not happen. Price is making lower highs. So we have this divergence, so we have to be careful with that. The best case scenario would be the MACD to break out of this ascending triangle or wedge, for us to have a pretty good confirmation on this short trade. If that would be to happen, that means the price either has to somehow consolidate around this level. In case it goes lower and coincides with the breakout from the MACD, then we have to remember that the price will trade right into its support zone. That would have been no room. That would give us no room for our take profit target to be reached on time, because if we place that around 12400 with a stop loss just above the last high, let's say here, and the price will be somewhere around this area, we have a pretty bad risk to reward ratio, even if we have a good confirmation from the MACD and from what's happening on the chart. So we got to be careful with this trade, although it looks good at the first look. Thank you very much for being with us, and we expect you another session of Daily Chart.